been pushing through earnings season, hearing from a lot of Canadian companies navigating through COVID-19. In the case of an insurance giant in Sun Life, no exception in the sense that they've got to deal with the pandemic and the impact on their business. However, their quarterly results were ahead of some Bay Street expectations. Let's check in with the CEO, Dean Connor of Sun Life, joining us. Dean, nice to have you back with us. Thanks for being with us this morning.
Thanks, John. Good to be here.
I just want to start with sort of a broader markets-related theme, because I think a lot of people have been listening to all the headlines surrounding COVID-19. They hear about things like 2 million jobs nearly being lost in this country in April, but then they look at the markets and they see, some optimism. You see a pretty good reaction to companies coming out with their quarterly results. How would you explain those two storylines, how the world seems to be balancing the uncertainty with some of this optimism?
Well, it's certainly the biggest paradox that investors are facing right now, and all of the investment professionals that I speak to, including the ones within Sun Life, the Sun Life world, are puzzled by this contradiction between the economic stress we see around the world and the strength of the stock markets. One of the answers is the unbelievable stimulus or support. It's not really stimulus, but support from both fiscal and monetary sides of things. But beyond that, people are struggling to figure out, is the market overvalued? Is there going to be a second correction? The one thing to be, I think, mindful of when you think about the unemployment figures is it's not traditional unemployment. There's been massive support for people and subsidies for people, absolutely appropriately. And the real test will be, what does it look like in 3, 6, 9 months?
Yeah, and we hear all different letters of the alphabet used to try to describe the recovery. Is it a V? Is it a U? Is it something else? You raise that good point about the fact that there has been aid provided to those who are out of work right now. What's your best guess, Dean?
Well, I confess we don't have a crystal ball better than anybody else's. I think it's actually unknowable, and I think part of the challenge and the thought we have as we manage through this is to try to, first of all, be realistic about what we know and what we don't know. The list of known unknowns is still relatively long. Now, it narrows with each passing day, but the list of unknowns about the disease, for example, is, do kids spread it? If you've had it, can you get it a second time? How infectious are people who are asymptomatic? So there's a fairly good list of known unknowns around the disease itself, and then how that restores economies. Now, there's reason to be hopeful. So, for example, today in Hong Kong, our employees are going back to work. It's at half speed in terms of the office, and it's well managed and pretty buttoned down. Same in China, started a month ago. So, and you can see countries reopening, and I think there's a lot of cause to be optimistic. Understanding there's still a lot of unknowns, and there will be second waves of this thing as it comes through.
Well, that's a great example. And earlier in the program, we were talking about how Shanghai Disneyland is reopening slowly but surely, seeing some of these signs worth watching. Since you were talking about some of your own investment advisors, when you were with us last time, you talked about how medicine is changing, at least the virtual part of it, and the ability to check in with doctors through technology. But this is also true with your advisors as well. I mean, I heard on your company conference call how Zoom is becoming one of the ways that these advisors connect. There's just a lot of technology going into that relationship between, the company and the customer.
Yeah, that's exactly right. And that old expression, necessity is the mother of invention. Well, yeah, we are kind of saying necessity is the mother of adoption, because we had invested in many of these tools going back over the last year or so, but some of our advisors have been slower to pick them up than others. And with this COVID crisis, it's been absolutely remarkable to see how Sun Life advisors, not just here in Canada, but across Asia, have grabbed these technologies and are using them to connect with clients, to take them through their financial plans, to remind them where they stand, can do e-signatures, can do everything. And what I think it's going to lead to coming out of this a step change in productivity for our advisors around the world. It's going to turbocharge their productivity. And last comment on this, I think this crisis is an example to accelerate everything we're doing around technology. So that's something that's very much in our focus right now, John.
Let's stay on that theme of investing, because when you were last with us, you made the point, which is that, I mean, there is money steadily coming in, right? That's the reality of the premiums and other parts of your business. So that money has to be invested somewhere. When it comes to the company's willingness to, provide loans or support businesses at a time when there are a lot of businesses that have big question marks right now, can you just give us a sense on where you feel comfortable allocating that money, if you're lending it out or investing in the Canadian economy right now?
Yeah, thanks, John. So our balance sheet, so we've got over $1 trillion of assets under management. The portion of that supports the insurance liabilities is around $170 billion. And those are loans and mortgages that support real businesses and real properties. There's real estate in there and so on. And as those things mature and as cash flow comes off, we have to reinvest it. So we are putting that money back to work. That's one feature of insurance companies. We're actually a counter-cyclical force that leans against periods of severe economic stress. We're putting money back into the economy. A couple of weeks ago, we did a $118 million loan against a new a mortgage against the new food warehouse being in the Toronto area. So we are putting money to work. Obviously, our underwriting standards continue to be high. I think 97% of our investments are investment grade quality, and that's true of our private loans and our commercial mortgages as well. So we're still putting money to work and trying to support the partners that we've been dealing with for many, many years.
And then just in terms of growing the business as well, at a time when a lot of companies are pretty cautious right now, to say the least. One theme that came up on your conference call, you also talked to our colleagues at Bloomberg about it, was the idea of M&A. And we were talking about that earlier in the program. Barrick maybe goes out and does a deal. Are you thinking about doing deals in this environment? And if you were to do some kind of deal, I mean, what are the kinds of transactions you're interested in looking at?
John, our story on M&A has been consistent, which is that, job one is to grow our business organically. And beyond that, if to the extent we have additional capital, which we do, we came into this very well capitalized. We've got a very strong capital ratio, low leverage, and our business mix generates a fair bit of cash flow up to our holding company. So we continue to look for M&A opportunities around the world across all four pillars. The thing I would add, though, given this crisis, is we have sort of a base case scenario, and then we have a severe stress scenario. And as we look at M&A opportunities, we're also looking at them in the light of the severe stress scenario, because we would want to make sure that if we find something that fits strategically, that if that severe scenario happens, that we still got enough capital to have a very strong buffer. So that's an additional overlay. But we haven't stopped looking at opportunities, and as you know, they have a long gestation period. So we'll just continue to continue to be patient, disciplined, but active. Put it that way.